Hello and welcome to the RAS Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers, and we're on a mission to become Australia's most trusted property podcast. Now, one of the questions I've been getting more than any other recently, except for questions about cash flow headaches and how to deal with those, is whether it's too late to invest in Perth or Western Australia for this cycle. Now, just for some background context, I'm looking at asking prices on a graph here for Perth, and I can see that over the past 3 years, house prices have been going up 15% per annum, so about 50% over 3 years for houses, and then for unit prices, about 13% per annum over 3 years, so about a 40% increase, and actually in a lot of cases, I would say quite a bit more. Looking at the quarterly figures, unit prices are up 6% and house prices 4.5%. So SQM research with the data there, really good free information you can get actually from SQM research. If you do a Google for SQM asking prices or SQM vacancy rates or SQM asking rents, there's loads of free information at the national level, at the capital city level, at the sub-regional level, and also the postcode level, which is a bit more volatile, of course, because there's less information at the postcode level. But I would say if you're looking as a starting point for thinking about your property journey or your next moves, it's excellent to be able to get access to all these figures for free. A lot of it's scraped from the big internet portals. Now, looking at residential vacancy rates for Perth, there was a bit of an increase from the lows up to 0.8%, but over the past 2 or 3 months, residential vacancy rates are tightening again. So the population growth in Western Australia is running at 3.5%, the highest in the country. Housing supply, well, there's just no way that we can physically build for that level of population growth. So for as long as that continues, it's boom times for Perth property. Now, I've been reading some market research reports on what's happening in Perth, what's happening in WA, what's happening in housing, what's happening for the economy. And the general view seems to be that the market is so tight, population growth is so high, and there's demand not only from investors in Western Australia, but also from buyers agents interstate, that when interest rates fall over the next 12 to 18 months, this is going to be akin to pouring kerosene onto a raging fire. Now, obviously, things can change. Things can happen that we don't expect. There could be a black swan event, or maybe an election result that changes things, or maybe even a global event like a conflict or something that sees a spike in oil prices. But as a base case scenario, it is easy to see how the boom time conditions for Western Australia could easily continue for longer than expected. One of the rules of financial markets, actually, that people often say is that bull markets and bear markets can often run for longer than you think, particularly the bull markets. Enough times I've seen people say, well, this must be the top, only for the cycle to get another renewed rush. Now, the way you should generally try to think about property is that you'll never catch the exact day to bottom or top of the market. You can't top ticket or anything like that. You need to just try and think rationally, try and think in a less emotional manner. And it does seem that obviously a big chunk of the cycle is already passed for Perth and WA. Even if you look over the past 12 months, house prices up 25% and units up 24%. So you're paying considerably more than you would have done 12 months ago. Now, just a few general thoughts before I introduce today's guest, Rob Power, a buyer's agent in Western Australia, who can give us the lowdown on what's happening on the ground. Just want to give a few sort of general thoughts about what happened in the previous cycle in Perth and any of the lessons or takeaways that we might have from that. Well, back in the day, I used to work in the mining industry. The early days of the mining boom went from the early 2000s, and we got the construction phase which followed rising commodity prices in China, in particular for iron ore and coal and natural gas and copper and all those other elements of Western Australia is so rich in terms of its mineral wealth. And the construction phase of the mining boom is generally the most intensive or labour-intensive phase of the boom. And that's what took this big surge of people moving across from the East Coast to the West Coast and also from overseas to try and earn the big wages, truck drivers on 200k plus, even in some cases people doing relatively administrative jobs earning six figures. It's easy to see why people follow when there's full employment because the potential is to earn a whole lot more. And that was even true in my case as a chartered accountant. I could go from professional services to working in industry and maybe earn double. So that was the previous cycle. And we saw a huge run up in housing prices in Perth up to around about 2012, 2013 probably, when the market started to run out of puff. And usually what you see when housing prices rise is that development becomes more practical, more profitable for developers, and we get this big supply of housing, and also for new units and apartments. And in the previous cycle, well, we did end up with a big, effectively an overhang of properties, probably from around 2014 onwards. Rental vacancy rates went pretty high. They went up to about 5% or so. I think if you look at SQM's figures, they would show that by 2016, the rental vacancy rate was 5.5%. It was actually quite hard to imagine in the go-go years in 2012 when the rental vacancy rate was only 0.6% for Perth. It seemed almost impossible to imagine that we could get to a phase where rental vacancies would be so high and rents would be falling and prices would be falling. But that's the nature of property cycles. Why they say the bigger the boom, sometimes the bigger the bust, because the supply response, the cranes of death move in, and the residential developers tend to overbuild in those markets. So it's all in together and all out together. So some similarities to what's happening today. Commodity prices went on a big surge thanks to the COVID stimulus. That's teed off a renewed round of mining investment in Western Australia. A lot of big mining projects are either being extended or new investment is going in for new projects. And that's seen a renewed round of massive population growth for Perth. I think as well, Perth was for a while there the cheapest mainland capital city in which to buy a house, which does drive that relative affordability play. I think investors start to like to look at the cheapest market, and sometimes home buyers as well. If they can afford to buy a house in one city and only a unit in another, that could actually drive them to relocate. So where are we at now? Well, prices have increased by well over 50% since the onset of the pandemic, in some cases nearer to 80%. So I think just a couple of the lessons, or it's really a case of caveat emptor, is that yes, for sure, we could get the interest rate cuts pouring kerosene onto that raging fire of a property market. And who knows, it could boom for another 2 years. It could boom for another 5 years. I don't know the answer to that. But the things that I would say as a takeaway from the previous cycle is to be a little bit careful about what you buy, a little bit careful about where and what you buy in terms of the asset. It needs to be something with owner-occupier appeal. Generally, I would stick to the bigger cities or the capital city and be a bit wary about investing in locations that are fully dependent upon one resources project, because where that is the case, you can see when the project moves out of the construction phase and into the production phase, that's a lot less labour intensive and a lot of the demand for housing will go away. So generally stick to the Perth suburbia. Housing, if you can afford it over a unit, is generally preferable. But also maybe potentially some of those thriving regional cities that aren't fully dependent on mining as a sector. And also just try to take a 10-year view. I think often when people go wrong in property, they're taking a view which is far too short-sighted. They're focusing very much on what's going to happen over the next 3, 6 and 12 months and not enough thinking about the long term. So I don't know whether it's too late in the cycle. It depends really on your circumstances. Obviously, prices have shot up significantly in recent years, so by definition, the risk is higher than it was. But I'm not going to say that the boom won't continue if interest rates follow market pricing and come down over the next 18 months. But we'll say eventually there comes a point where prices rise to a level that is high enough and interest rates are low enough that the new housing supply cycle will really kick off in earnest again. And there will be a period at some point in the next decade when rental vacancies rise again. Seems hard to imagine now with a rental vacancy rate of 0.6%. But eventually there'll come a time again when maybe rental vacancies go to 3 or even 5% and above, as they did in the previous cycle. So with that out of the way, I'll stop waffling on. And without further ado, I'll introduce our guest, Rob Power, who's a buyer's agent in Western Australia and Perth. And he's going to give us some insights in terms of what's happening on the ground, what types of properties are doing well, and some tips for people looking to buy in a tight market, which is always a challenging thing to do. Cheers. Enjoy the show. G'day, welcome to the Australian Property Podcast. We're on a mission to become Australia's most trusted property podcast. And I'm Pete Wargent from Alan Wargent Property Buyers. Now, over the past 6 months or 12 months, I've been getting so many people ask me what's happening in Perth, what's happening in Western Australia. Is the boom going to continue for 1 year or 5 years or 10 years even? What's happening over in the Wild West of Perth property? I was actually over there myself just a little while back, but it's been a while since I was there. And in any case, I'm not an expert really in what's happening on the ground in Perth and WA. So I thought, and today I will get a Western Australia buyer's agent onto the podcast who can see what's happening on the ground and give us some flavour on what's caused the boom, the latest trends, and what we expect to see happening next. So today I'm joined by WA buyer's agent Rob Power. Rob, welcome to the show. It's great to have you on. Thanks.
Thank you very much, Pete. Great to sit down and have a chat with you. I'll try and keep you informed and up to date as to what I'm seeing on the ground here.
Sounds good. Obviously, now straight away, listeners will pick up on some dulcet tones there. Sounds like an Irish background. Tell us a bit about your background and where you're from.
Yeah, I was born in Dublin, but grew up in Galway, which is on the west coast of Ireland. It's Ireland's favourite city. It's a great place to grow up. Very vibrant, full of students, arts, culture. Yeah, good upbringing there.
It's pretty good. Obviously I've spent a lot of time in Dublin over the years, and it's a big place for entrepreneurs these days. Galway, I don't remember quite so much about it. Must have been a Guinness maybe, but I know it features in the Ed Sheeran song, so it's definitely a popular part of the world. Now, obviously, you've come over to Australia. So what was it that brought you over to Australia initially? Because I'm guessing you weren't originally working in real estate when you came out to us.
No, I've only been working in real estate in the last while, but I originally came to Australia. It was on a holiday. It was in 2008, and I just decided to travel backpacking through Southeast Asia. And I had a lot of friends that came out here two years previous. So I was just going over to meet them for a month, say hello, and go home. But things changed. I got used to being on holidays. I was enjoying myself. And then at the same time, everything was turning sour with the GFC at home. So yeah, that's it. I didn't turn back.
Yeah, like a lot of Brits, I spent many years living in Bondi and Bondi Beach, and of course a lot of Irish around there. Before we crack on to talk about what's happening in WA and the Perth market, tell us a bit about your journey in property, because I guess one of the things which you've already alluded to is that for various reasons, Ireland was one of those European markets where prices went completely nuts for probably 7 or 8 years. A lot of cases of prices tripling, and then they eventually got to that point where people felt like it was a one-way bet. And then when the global financial crisis arrived, there'd been a lot of speculative development, and obviously the structure of the Irish economy being part of Europe and not having control of the currency or interest rates, things really turned heavily downwards. And I've even spoken to people over the years who had the investment properties that they bought in 2006 or 7 brand new, and they weren't tenanted for years because they were built out in the middle of nowhere. And I guess with all of that as a backdrop, it seems interesting that you decided then to sort of kick off your property journey. Like, how did that actually influence your sort of journey into property and real estate?
I suppose I started investing with other assets, pretty much everything up until I had enough to save for a deposit. But I just kind of understand a bit about market cycles. And then I had this thought that if you buy at the right time, you get wealthy. And if you bought at the wrong time, you'd go broke. So I invested in property, but I was cautious when I'd done it. And yeah.
Yeah, that's pretty interesting. And I guess tell us about the first investment property that you bought, because I guess it's a common question on podcasts, but it's an important buy for people because that often sets the scene for what comes next. And if you get the right asset the first time around, it obviously makes the journey easier as you go along to leverage into the next one. So let's about your first investment property, and then we'll move on to take a look at what's happening in Perth and WA from there.
So my first investment probably came after about 3 years of investing in other type of assets. So I just started reading every kind of book, magazine, blog, podcast, everything, up until I had enough for a deposit. And by the time I had a deposit, I had read a lot. So I kind of knew about land values, market cycles, add-on potential, yields. So yeah, I bought something with good fundamentals and just held on to it.
Yeah, it seems to be often a way that you get the best results if you can buy the right type of asset, hold on to it for the long term, use some of other people's money, as they say in the books, and then let time and compounding do the heavy lifting. So I guess I've just got one other question before I come on to Perth, and that's, how did you actually end up in WA? Because I guess a lot of people I know that have come from Europe, they head to Sydney and Melbourne in particular initially, and then sometimes they relocate to southeast Queensland. That seems to be a popular lifestyle part of the country. But how did you end up in Western Australia? Was that a strategic thing as part of your property journey, or was it just through circumstance that you ended up on the West Coast?
No, it was true circumstance. It was pretty much the same way I ended up in Australia. It was a bit of a search for adventure. Myself and my partner were working in Victoria during COVID, and most people post-lockdown, we just had an itch for travel. So we just packed our bags, bought a 4-wheel drive, rooftop tent, and done a big lap around Australia. So we got as far as WA, and it's pretty nice. The lifestyle's pretty good here. So we're here ever since.
Pretty good. The one thing that always makes it difficult for me to envisage living there is just the sheer distance from the East Coast. I think variously people have advised me over the years, don't try and run an East Coast business from the West Coast because you'll spend so much time on flights and booking overhauls or overnight stays in hotels. And even though it is appealing from the perspective of being direct flights to Heathrow, which I've now done from Perth, but it is a pretty isolated part of the country. So in that context, Western Australia, probably more so than any other housing market, probably moves to its own drum or has its own cycle. In particular, mining is a huge part of the industry, gross value added part of the economy over there. I actually did some looking into it recently, yeah, and particularly if you look at the Northern Territory and Western Australia, it far outweighs any other sector of the economy in terms of the value added. It's about a quarter of the economy in the NT. Western Australia is a little bit more diversified, but definitely you find the market cycles are amplified by what's happening in mining. Now, in the early phase of the mining boom, I was actually working in the mining sector or industry myself, because you could earn a whole lot more, basically, if you went to work in that sector. I'd sort of had some experience in resources as a chartered accountant auditing the big mining companies and so on. But I went into industry, and we actually had quite a bit of work over in WA, like a lot of mining companies. And when you could sort of see the mining cycle teeing off, and then a lot of people relocated to Western Australia in the early part of the first phase of the mining boom, early 2000s, and that effectively parlayed into full employment and a property boom for Perth. But then when the mining construction boom peaked around 2012, 2013, the same thing sort of happened to the Perth property cycle. So, Rob, tell us a bit about what's been happening over the past decade in Perth, because obviously we went through a long quiet period. There was a supply overhang from the previous cycle, and then there's a long period where not much happened. But what have you been seeing happening over the past decade?
Yeah, the second end of the decade has been a complete turnaround. The first 6 to 7 years was little to no growth, even some declines. It hit kind of rock bottom in early 2020, but things began to change with a bit of government stimulus, the housing stimulus package, building bonus, and some stamp duty rebates. Grown up quite a lot over a decade overall. The house prices are up about 83% and units about 38%.
So I'm thinking that a lot of that growth must have come since, well, even over the past 3 years or maybe something like that. So a long period of not very much, and then all of that growth all happening at once.
Yeah. A lot of it's been catch up to other capital cities, but also Perth, there's a lot happening for it. It's relatively affordable. It's proximity to pristine beaches, great career opportunities, good education and lifestyle. And there's a lot of people moving here.
Well, definitely the lifestyle. I only spent a week there on this trip, but it always appeals to me as a place with a good climate. You've got everything's got proximity to the coast. Very sort of modern, gleaming sort of a city. I did a tour around Optus Stadium, and the tour guide told us there that the government had fully paid off the asset. It's just a brilliant facility, but with all the mining wealth, you can just see how that gets reinvested back into the economy. I think, as you said, in terms of what's been teeing off the cycle now, I think a lot of it is maybe catch up. Perth was for a while there the cheapest mainland city to buy a house in the whole of the country. I don't think that will be true now, but it probably was 3 or 4 years ago. And I think, as you said, the sort of next phase of the mining boom, where we've had a surge in commodity prices. There's more mining projects being invested in, either extended or new developments. And that's taken population growth all the way up to about 3.5% for Western Australia, which is a phenomenal rate of growth. And there's just no way that the housing supply can react that quickly to such a massive surge in immigration, whether it's interstate migration or from overseas. So obviously there's all of these factors pushing the market. And I think as well, a lot of East Coast investors, from what I've spoken to, a lot of buyers agents are sending their clients over to Perth and WA, and it's creating a sense of fear of missing out, or FOMO. What are you seeing sort of moving into the real time? What are you seeing in the market at the moment? Is that sense of FOMO still around? Are some of the more affordable areas performing, or what are you actually seeing in terms of the day-to-day dynamic now?
I think it's moved past FOMO. I think people are a little bit more cautious now. People are, just being more realistic. Sales agents are actually taking on board people's offers, getting back to them, communicating with them, where this wasn't the case a few weeks ago. There's different dynamics playing out in all different markets, the sales markets, the rental markets. A lot of people are moving from the affordable housing market into unit and townhouse markets due to affordability constraints. But there's also increased local demand. Locals are seeing the opportunity to upgrade or maybe sell a poor performing investment property and upgrade that also. But there will be strong markets moving forward, especially the mid-tier and top-tier markets. Vacancies are also super low. They were 0.6 up to 0.7 which is still well under the national average of 1.3.
Well, we've seen a lot of very similar dynamics, I should say, in Brisbane, I would say, over the past couple of years, where I think sometimes the budget doesn't really extend to buying a house anymore, which has pushed more people into buying units and townhouses. Also, borrowing capacities have been quite significantly constrained by higher mortgage rates. Also, the regulator's got a lending assessment buffer of 3 percentage points. So a lot of things have really pushed people into sort of units, townhouses, and more affordable options. But what that has also done is it's crimped the new housing supply. There's not really enough being built in many parts of the country. I think in Perth, maybe in suburbia now, we're starting to see an uplift in building approvals and houses are starting to be delivered, but it's still nowhere near the pace that's required. As you mentioned, rental vacancies are so low that I think a lot of people in the rental market are thinking they would rather try and buy something or anything just to get into the market. And also you do get that, as you mentioned, a sort of amplification of the cycle, because people get the sense that if they don't buy now, they'll be paying more in 3 months' time or maybe in 6 months' time. So it kind of brings forward a bit of the demand as well. Rob, one of the questions that people ask me, probably more than any other, in fact, is whether it's too late to invest in Perth for this cycle. So I just saw a CBRE report released over the past week with the outlook for the next 5 years, and they're predicting, well, effectively an undersupply of new stock, particularly units and apartments, but just in general, an undersupply of housing for the next 5 years. Rents to rise 25% nationally ahead of inflation and so on. So when people come to you, I assume you're still buying in Perth at the moment, but do you think it's too late? Have you missed the best part of the cycle?
It's definitely not too late. You just have to be more selective. Perth is still quite affordable in comparison to other cities around Australia. You can still buy for around 700k. That's within 30k to the city and close to the beach. So like the lifestyle is there. There's value. You know, people are migrating here for a reason. It's a great place to live. Yeah.
I suppose you need to probably focus more on those sort of owner-occupier markets and not be drawn too much towards the investor stock. But obviously, it's not an easy market to buy into at the moment. I think if you've got a good property that's well presented and it's listed on the real estate portals, I'm guessing a lot of those are selling very quickly. I think 6 months ago, people were telling me even before the first open home, a lot of times properties were being shifted before you even got a chance to walk through them. How do you go about tackling that as a buyer's agent? Because I guess, as you said, you've got to be a bit selective on the market you need to buy into. But how do you try and get the edge to buy a property where the market is so tight?
You just have to be prepared, know what you're looking for before it comes on the market, and be ready to act as soon as it does come on the market.
Yeah, I mean, obviously, being decisive is a big thing. I mean, we're seeing the same thing in Brisbane. So I'm just going to reel off a few stats here from PropTrack. So PropTrack do a new listings report once a month, and for the month of September, new listings were up. Well, in some parts of the market quite significantly, particularly Adelaide and Brisbane and Hobart. Some other markets not so much. But yeah, there was a sort of a significant increase in new listings in Perth because moving into the spring selling season. But then when you look at the total stock on the market, it's actually down double digits from a year ago. So yes, there might be more properties being listed for sale, but actually the market, if anything, it's got tighter. So there might be a bit more choice in terms of new listings coming to market, but obviously overall things must be very tight still.
Yeah, things are definitely still tight. The market's hot. People want property, but it's just if their budget allows. So there is that shift, you know, to the unit, villa, townhouse kind of market. But people are confident and they want to get involved. So yeah.
So do you have any tips for investors? I guess, you know, most often in a tight market, the advice goes something along the lines of be selective in terms of what you buy. Try not to get involved in a bidding war or overpay, and also try and take a bit of a medium to longer term view rather than focusing too much on what's going to happen in the next 3 or 6 months. But do you have any tips for investors, or any maybe any clues from previous cycles that people should think about?
Yeah, just know your investment time frame. Think medium to long term, like you said. If you have the budget, go for a freestanding house. If not, townhouse or villa. I'm not really seeing much value in the unit market at the moment. It is a bit cheaper, but with strata fees calculated in, it's not too great. And stay as close to the city as you can, and owner-occupier bill.
Actually, you've just triggered me to think of one other question there, and that is, so I made a sort of presumption here that people are most often looking at Perth, but obviously Western Australia is a big state. Are there other sort of markets that are outside of Greater Perth, or maybe a bit more regional, that people tend to look at as well?
Yeah, there's a lot of lifestyle markets to the south of Perth, and then a lot of some more lifestyle markets north of Perth as well. But there's also a lot of mining towns where the markets are pretty strong as well.
Yeah, I guess the history of the previous cycle would show there's some of those markets. Certainly, the further north you go, I think they can be a bit more cyclical, but also the supply can respond in some of those markets, like Port Hedland in particular, went through some real big boom times up to around 2012 or so, and then the rental returns were very, very high for a period of time. But then when the mining companies were able to bring some new supply, and certainly when some of those big construction projects finished, then the prices and the demand dropped right off. So generally speaking, as an investor, you want to try and focus on the areas with a sustainable long-term growth in the economy, thriving regional markets that aren't fully dependent on the one industry, because there's obviously more risk involved if you've got too much focus on the mining sector. Rob, thank you for your insights. If people want to speak to you, got any questions for you, or if they're interested in using a buyer's agent in Perth or WA, where can they go to contact you and go for more?
Yeah, thanks, Pete. You can reach me at www.robpowerbuyeragent.com.au, or else email at connect@robpowerbuyeragent.com.
Perfect. Thanks very much. Now, any plans to head to Dublin for New Year's? It's a few years under the bridge since I used to spend my New Year's Eve in the Cafe on Seine drinking multiple pints of Guinness, but or maybe get down to the Temple Bar pub or anything like that. But any plans to be in Ireland over Christmas, New Year?
Yeah, I plan to go home and see the family this year. I'm not too sure about Dublin. I probably will make a trip up there because my sister lives there. If not, you'll find me in Galway drinking a pint of Guinness.
I wish I would get the leave pass to come over and do the same, but I fear I'll be stuck at home babysitting this time. Those good years are behind me, unfortunately, but I'm very jealous of a good home-brewed Irish pint of Guinness. You can't really go wrong with that. And one of the great business case studies, actually, they call it the Lindy effect, those businesses that have been around since the 1700s, churning out magnificent product. I guess they're going to be around for a long time to come. So thanks so much, Rob. Really enjoyed connecting, and thanks for the insights on Perth. And if you want to know some more, just Google Rob Power Buyers Agent, or check out the website or Facebook page, and I'm sure Rob would be delighted to help out. Thanks, Rob, and look forward to chatting again soon.
Thanks, Pete. Talk soon.
So that's it for today's show. Thanks for joining. I hope you enjoyed the brief interview there with Rob, 15, 20 minutes or so of insights in terms of what's happening in Western Australia. So just to recap, Perth property prices have really teed off. I guess since the onset of the pandemic, I suppose from 2021 onwards, we've seen a dramatic uplift in prices, a surge in demand from interstate buyers, but also from home buyers in Perth and Western Australia. And the market up 25% over the past year, and a whole lot more over the past 3 years. So if you're going to take the rush and dive headlong into Perth property, just try to remember the fundamentals, try to take a 10-year view, and you've got to be selective about what you buy and where. and also resist the temptation to get involved in a bidding war. I think sometimes where people go wrong towards the top of market cycles is they feel like the opportunity of a lifetime only comes around once, and then they end up bidding and overpaying for property. And then when the market peaks out, they find out that the demand just isn't there at the price that they paid, and then they can come unstuck that way. So, just a few words of caution, I suppose. It is expected that interest rates will come down if you look at market pricing for the next 18 months, and potentially that will tee off a whole new boom cycle for Perth. But the future is always inherently uncertain, and you do need to manage risk, borrow less than you can afford, make sure the mortgage repayments are comfortably affordable even in the instance of getting a rental vacancy for a while, which is unlikely at the moment, but at some point the rental market will soften as well. So that's it for today. Hope you enjoyed, and look forward to seeing you on the 2 Cents show as we discuss every Sunday from 7 a.m. I join Chris Bates, where we talk about the big 3 news stories of the week. But until then, enjoy, and I'll see you next time.
Thanks for watching this video on the RAS Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.